All eyes this week were focused on the FOMC meeting at the Fed. As expected, the FOMC raised by 25 basis points to hit a 22-year high. The benchmark rate moved from 5.25% to 5.50%. Keep in mind the effective rate is less at around 5.32%. It is unclear if the new bank capital requirements will have an impact on the effective rate. The Fed made it very clear that the inflation fight continues, despite CPI sitting below 3.0%. The Fed chair urged caution in particular in relation to the prospects for the American economy. On Thursday, stocks gave up early gains and slightly declined. 10-year T-note yields rose above 4.0%. This was more a Japan issue rather than a U.S. issue. It is believed that the BOJ could adjust its yield curve management strategy. At Friday's policy meeting, if this were to occur, the Japanese stock markets could fall as long-term yields could go higher. The S&P 500 posted a nearly 16-month high on Thursday. While the NASDAQ 100 posted a one-week high on the back of strength in the technology sector. The earnings season is now in full swing and is off to a solid start. Around 80% of the companies that have already released their results exceeded profit forecasts. Thus, despite all the pessimism and the persistent calls for a recession, earnings on the whole have been solid. Meta reported Q2 revenue that was higher than anticipated, and this pushed the stock price around 4% higher. The S&P 500 index, SPY, closed down -0.64%. The NASDAQ 100 index, QQQ, closed down -0.22%. The Federal Deposit Insurance Corporation, FDIC, is looking to impose tighter bank capital requirements on U.S. banks. This is the response to the regional banking crisis earlier this year. In my view, the FDIC has to impose stricter capital requirements on banks. This will impact on the bank's shareholder base. The increased capital requirements could cause an uproar among hedge funds and private equity investors. The Fed and the FDIC are saying enough is enough with the ongoing attitude of leverage up on risk. Or risk management, who cares? Remember, we will be bailed out as we are too big to fail. Over the past 2 decades the banks have acquired the wrong shareholder base. Things are about to change. The FDIC's new bank capital rule proposal may eliminate big banks' excess capital. This will require banks to build up capital. Thus, banks will cut dividends and share buybacks for shareholders. The Euro Stoxx 50 closed up +2.32%. The Shanghai Composite Index today closed down -0.20%. Japan's Nikkei Stock Index closed up +0.68%. All the graphs in this video are by BARCHART. If you are thinking of subscribing to BARCHART, my affiliate link is in the comments. Also included are my affiliate links to the online brokers, eToro, First Trade, and FX Primus. These videos give a quick overview of the U.S. stock markets with a couple of stock ideas. Issued on Mondays, Wednesdays and Fridays based on the underlying blog. Visit my blog site www.smartestdata.blog. If you like these videos, hit like and subscribe, it really does help the channel. See you in the next video.